In 2024, the global economy exhibited modest growth amid the complex interplay of issues. The International Monetary Fund, the IMF, estimated global economic growth at 3.2 for 2024, with a slight acceleration in advanced economies and a modest slowdown in emerging markets and developing economies. The global economic growth in 2024 was tempered by significant challenges, which included trade tensions, rising debt levels, and geopolitical uncertainties. Moving on to the domestic front, during 2024, the economy demonstrated resilience with an estimated GDP growth of 2%, largely driven by the mining and manufacturing sectors. The agricultural sector faced huge challenges, notably a negative growth, largely attributed to El Nino effect and El Nino-induced droughts which affected crop yields throughout the country. The overall positive growth reflects the government's concerted efforts towards economic transformation. In April 2024, the Reserve Bank of Zimbabwe introduced the gold-backed currency ZWG to stabilize the economy, alleviate inflationary pressures, and restore confidence in the local currency. Indeed, there were also some regulatory developments, and thus on the domestic front, efforts were made to improve the ease of doing business as well as promoting capital market development. This led to the publication of several statutory instruments, and I'll just highlight the two. Statutory Instrument 110 of 2024, which was on the reduction of capital gains withholding tax from 4% to 2%, and suspension of capital gains tax and vesting period on listed securities. There was also SI 147 of 2024, which was on self-listing of securities exchanges. Moving to our strategic focus, the Commission continued to focus on its three programs: governance and administration, licensing, supervision, surveillance, and corporate finance and market development. On the internal focusing program, there was a significant improvement in the organization's compliance and client satisfaction levels. This moved from 57 in 2023 to 74 in 2024. The recapitalization of the Commission remained a priority, and funding amounting to ZWG 8.6 million was secured from Treasury for the purchase of employee motor vehicles. Remuneration challenges, however, continue to impact staff morale, retention, and skills attraction within the Commission. The Commission experienced financial constraints that impacted on operations and resource allocations as we review our financial performance. These challenges were driven by the subdued trading activity on the main exchange, which is the Zimbabwe Stock Exchange. The Commission recorded a surplus of 15 million ZWG on the back of revaluation gains. Operational funding support of ZWG 3 million was received from Treasury, and the Commission appreciates this continued support. I'm happy to announce that the board welcomed new members in 2024. You have already met some of the new members, Commissioners Grace Ngonidzashe Mzondo, William Magombedze, and Chaona Mshambadope. I'm also happy to announce that Commissioner Nyaradzo Tirivan was also appointed to the SECZim board with effect from April 2025. The Corporate Secretary, Mrs. Cordelia Mtangadura, a lot of you may know her, left the Commission on 11 November 2024. I would like to extend my sincere gratitude to Mrs. Mtangadura for her exceptional service and the dedication to the Commission since 2010. Looking ahead, as we enter into the future, the Commission is aware of the fast pace of technological change, the rising complexity of financial products, and the increasing risk of cyber threats that demand that the Commission continues to evolve its regulatory approach. Guided by the anticipated National Development Strategy 2, the Commission will work on a new 5-year strategy for the period 2026 to 2030 to ensure that it continues to be relevant on investor protection, market development, and inculcating capital market and broader financial sector stability. The Commission will continue to engage with all stakeholders to develop and refine our strategies.
To also improve turnover, this is where we are discussing with the Ministry of Finance to try and bring government bonds into the secondary market. If you look at other regulators, for example, Kenya, more than 50% of their revenue comes from government-related bonds. At the moment, we've got zero. If you look at Zambia, it's the same pattern. If you look at even the JSE, 90% of the trading on the JSE is government treasuries. Equities by nature across all capital markets, they contribute a small component of the trading. And for us in Zimbabwe, that's where we've got 100% of our exposure. So we need to bring government bonds into the secondary market so that we increase that top line. So we are focusing on growing the top line, and those are some of the measures. We're also looking at new products. So in terms of the proposed amendments to the Act, there are certain areas that we're not currently regulating, for example, commodity exchanges, which we want to bring under the purview of the Commission. We've got virtual assets. We understand our citizens are participating in trading Bitcoin, Ethereum, and so forth. And we want to bring those products under our purview so that as they trade, we can also earn a bit of income there. So we have got strategies on the income line. That's where we are focusing. But we've also looked at recruiting lower level to just perhaps officer, graduate, trainee level, which are lower cost employees. That one we have got full permission from the commissioners to implement. Then on delistings, yes, it's quite a concern, and we are looking at listing costs. So as a commission, there are certain things that are within our control, and listing costs is something that we can directly influence because we are the ones who publish the statutory instrument that speaks to listing fees. So it's easier to navigate in that space. But if you look at the key challenge has been the operating environment. And this is where I said the key development last year of us introducing our own currency, which has been relatively stable, is a major ingredient in terms of the operating environment, because the capital market cannot thrive if the exchange rate is volatile. It cannot thrive if we have got too much inflation. It cannot thrive if our GDP is not growing. And both the fiscal authorities and the monetary authorities are really focusing on ensuring that we have got stability on that front. So long term, that's where we hope that as the economy stabilizes, as the environment stabilizes, naturally then businesses should grow, and then we've got a wider pool to get listings